Let's
You
see.
know what? I'm going to try logging in online again, just because I think it would be better. I think I resolved the issue now.
Well, we're going live.
All right, let's see here.
Here we are. We're live. All right. Welcome, 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 everyone. I hope that everyone is having an amazing, what is it, Thursday already so far. Um, Martin, are you there?
I am here.
Got some feedback.
Yeah, got rid of it. No.
All right. Can you see me and hear me okay?
I can see you and hear you just fine.
All right. Let me go to Zoom. Here we are. Perfect. All right, everyone. So I'm super excited because today is Thursday, but not only that, we have an amazing tax expert with us to answer our questions. He's been so kind and so generous to slice out an hour for us so that he can answer some of those questions that a lot of us have been having about this tax season. You know, 2020 is really like a year unlike any other in so many different ways, right? And one of those major ways is with our taxes, because so many people, you know, with the PPP, unemployment, and just everything else in between, we know that a lot of people are going to be having questions about their taxes. So Martin was so kind to come jump on, share his 35 years of expertise and knowledge with us so he can answer those questions. So I want to introduce this man to you all first, right? His name is Martin Wathen, right? And he's been in the tax industry. I call him a tax expert because they say if you've been in a business for more than 10 years, you're an expert. But he's been in the industry for 35 years, since 1986. So he's an expert, okay? Definitely want to take some notes if you have it. But this recording is going to be available on my Facebook as well. Now, Martin Wathen he's located in Lutz, Florida, but he does operate nationwide. So it doesn't matter if you're tuning in from California, from New York, from Massachusetts, where I'm from, you're able to actually be blessed by his help, you know, and we're going to have his contact information available to you as well. But we're going to go ahead first. And I, want to just say, I decided to interview this man because one, I love his approachability. Okay. A lot of tax experts, they aren't as approachable, and I find Mr. Wathen to be extremely approachable. He's open, he's honest, trustworthy, non-judgmental, which I love. And again, he's an expert at what he does. So he's comfortable with answering any questions that y'all might have, and he works with integrity, which is huge for me. So Martin, first, can you please, I want to thank you for joining us today. Let us know a little bit about yourself, a little bit about your background, and why taxes.
Well, Angel, thanks for inviting me today. I'm happy to be here with you. And my background, I joined my parents in 1985. We formed an accounting firm here in Tampa, Florida. And when Dad passed and Mom retired, I continued operating it. It grew to be a pretty large size, and I sold it in 2006. And I didn't completely retire. I kept a handful of clients and just worked from home. And then a couple of years ago, a friend of mine who was quite old that I've known for a number of years, he said that he was in the same industry, and he said he wanted to retire. And so he asked me to take over his book of business, which I did for him. But I didn't want all those people coming to my home. So I, at that point, rented an office in Lutz and been working out of there. And then just this last year, another older accountant that I know said he wanted to retire and asked me to take over his book of business as well. So business is good right now. And in my practice, I've always focused mostly on businesses and business owners. But over 35 years, I've had an opportunity to prepare taxes of all types for all over the country, actually around the world, because the U.S. taxes your worldwide income. So no matter where you are, as a matter of fact, there's over 120 IRS agents stationed outside the United States.
Wow.
So I've actually represented people and dealt with IRS and taxes from all over the world in pretty much every single state in the union. So I have a little bit of experience. That's my background.
A little bit, a lot of it. And then what I love is what you say, not one, but two people asked you, reached out to you for you to take over their book of business. So again, guys, it just goes to show you like the integrity, the character of this man. This is the reason why we only work with the best. So this is the reason why I chose Mr. Martin to go ahead and do this interview with me. So let's get right into it because I know that your time is valuable. What are some of the major changes or highlights taxpayers should be aware of for 2020, especially considering everything that has happened in the pandemic?
Well, one of the big things this year is that you've had the two stimulus packages. One was $1,200 plus extra $600 for your dependent, and this last one was $600 of stimulus. Most people received their stimulus checks. Some people did not. If you did not receive it, what's going to happen when you file your 2020 tax return is we'll add that in. You'll add that in as if it were a payment to the IRS. In other words, you'll get that as a refund. So if you didn't receive one of them, if you didn't receive both of them, when you file your 2020 tax return, there's an opportunity for you to get that. If you've already received it, you're not going to get it twice. You don't want to put in that you didn't receive it if you did receive it. So be careful about that. A lot of the tax law changes apply to businesses. There's some recent ones. There was a tax law change that was just signed at the end of December, and then there was another one that was signed at the end of December. So two big tax law changes. They have a lot of provisions that deal with businesses. One of the things that a lot of business owners will be happy to know is that in 2021, for 2021 only, they can deduct 100% of their meals and entertainment. Prior to that, in 2020, for instance, 0% of your entertainment was deductible and only 50% of your meals. So that's a nice big change for business owners, and that should help stimulate the economy, especially restaurants. So we're hoping that that turns out good. The other big thing, there's still a lot of changes coming in from the Tax Cut and Jobs Act that was signed 4 years ago. And that changed a lot of things for a lot of people. Most people do not have to itemize deductions at this point. So there's a lot of changes still coming on board from that. Another change is just for 2020, charitable contributions. So even if you don't itemize your deductions, you can deduct $250 charitable contribution right on the face of your 1040. So that's an important one that everyone want to take advantage of. And of course, the reason for that was to assist charities with the COVID-19, the pandemic, trying to help them get through it. So if you have any charitable contributions, now the rules for that, you need your receipt before you file your tax return. So make sure you have a receipt showing that you actually paid the contribution and that it went to a legitimate charity. There's a lot of things, if you give some money to someone who's in need, that's not a charitable contribution. You have to give the money to the actual charity, to a deductible charity to be able to do that. So be careful about that. Are there any specific questions you can think of?
Yeah, I'm actually typing because I see that someone put great info in the chat. I'm just saying if anyone had any questions for you. So it looks like you answered one of the questions that I was going to ask about the stimulus checks, and that was talking about stimulus checks. There's still a lot of buzz concerning them. There was I heard that we're supposed to be getting one for $1,400. I don't know if that's true, but I believe that you answered already the question: can people still receive those stimulus checks if they haven't received them from last year? And then are they tax deductible?
Well, here's the thing: it's not taxable. So you got the income; you don't have to pay tax on it. You don't get to deduct it, but you don't have to pay tax on it. So you don't have to report it, but you don't want to get it a second time. When you're filing out your tax return, be careful that you don't put in that you didn't receive it, because you don't want it a second time, because then you've got too much.
Okay, yeah, that's how you get yourself in trouble, right?
So you get yourself in trouble.
So guys, basically, if you've gotten your stimulus checks already, when you go to file your taxes, you do not want to go and say that you didn't get it, because they're gonna get you for that. Okay. But if you did not receive it, because I know I have a friend who did not get her stimulus check, when she files her taxes, what you're saying is that she can go ahead and say she didn't get it, and then she should get it back in her refund, correct?
Exactly, correct.
Perfect. Okay. So I'm going to actually go to I have Reese Rain. She has a question. If you're married but never filed together as a couple, but previously bought a house with both your names on the deed, can just one person claim the house and still file separately?
Sure. Yeah, with a marriage, two things have to happen for the mortgage interest deduction and the real estate tax deduction. Is the home has to be in your name, and it can be your name and somebody else's, but it has to have your name on it, and the mortgage has to have your name on it. You have to be liable for it. If you meet those two and then the third qualification, you have to pay it. You have to pay the mortgage. Now, if you and your husband put all your money into one account and you pay the mortgage out of that account, then either one of you can take the deduction. That's not a problem. Just don't both of you take it, only one or the other. And the rules are, if one spouse itemizes your deduction, then both have to itemize. The standard deduction, $12,500. If one of you can take itemized deductions, let's say of 16,000, then the other one is going to have to itemize also. So if the other person only has itemized deductions of say 2,000, it may still be better, even though you could itemize, it might be better to take the standard deduction for both of you. That's just something. And then if you're using a tax software, it should be an easy check to see which one is going to work out best for you there.
Okay.
Just because you can itemize doesn't mean you have to itemize.
Okay. All right. So Reese, I hope that answers your question. If you have any other questions, like follow-up questions in regards to that, reach out to me or reach out to Martin, and we'll go ahead and make sure that we get those questions answered for you. The next question coming from Miss Courtney Israel: what should someone do who has not filed for 2019 or 2020?
File. If you're required to file for 2019, then go ahead and file. There's no statute of limitations, so you have forever to file past returns that you need to file. What's the requirement for needing to file? If you owe any tax, then you need to file. If you have more than $400 of self-employment income, you need to file. The only other reason to file is to get a refund. If you say you've had a little bit of earnings and some withholdings on it, but you don't owe any tax, your taxes are zero, but you could file and get a refund, and that would be another reason to file. If you do a refund, make sure you file within 3 years, or you cannot get the refund. If you owe tax, and you haven't filed, then there is no statute of limitations on that. That can last forever.
Okay. I think that, let me see, just check and see if there's any other questions. Okay. Thank you so much for answering that. So Courtney, one thing that he did say is that if you said that if you made more than $400 within that tax year, that you should definitely file your taxes for 2019 or 2020, correct?
$400 of self-employment income.
$400
if you did a side gig, Uber or something like that, then you would need to file.
Okay, and it looks like Heather, she said that she never, I believe that I don't know if you're just jumping on. She said she never received her second stimulus check. I have everything I need to file my taxes. Should I go on and file or wait a little longer? Go ahead and file. And Mr. Martin said that when you go file, they're going to ask you if you received both stimulus checks, correct?
That's
So
right.
if you haven't received one of those stimulus checks when you file your taxes, go ahead and put that on. And they'll go ahead and put that in your refund. All right, so looks like we got those. So back to some of the other questions. So the other question I have, what are some of the conditions? So this is about the PPP, guys, because everybody's talking about the PPP, the Paycheck Protection Program. What are some of the conditions or stipulations having to do with the PPP as it relates to filing taxes for small business owners?
Okay. Well, one of the neat things about the PPP is if you meet the forgiveness requirements, then it's 100% tax-free, and you get to deduct the expenses that you paid for with the tax-free money. There's a code section that says if you get tax-free money that you don't get to deduct the expenses that you pay for with the tax-free money. But Congress, just in this big tax bill they passed at the end of the year, they changed that to this particular tax-free money. So the PPP money, when it's forgiven, completely tax-free, and you get to deduct the expenses that you paid for with the tax-free money. In addition to the PPP, if a lot of businesses signed up for the advanced loan that you get from the small business, the emergency disaster loan assistance, and they got I think it was an advance of like $1,000 per employee. And the initial guidance was that was going to be subtracted from the PPP forgiveness amount. And that's gone now. So it's not going to be subtracted from the PPP forgiveness amount. And that also is going to be tax-free money. So both of those completely tax-free.
So you're saying that the PPP is tax-free?
Yes, if it's forgiven. The forgiven part is tax-free. And for most businesses, most of it or all of it will be forgiven. Some of it may not be. The part that's not is just a normal loan. And so again, you wouldn't pay tax on it, but it would be a normal loan. So if you got, say, $20,000 of PPP, and let's say 18,000 of it was going to be forgiven. Now 18,000 is completely tax-free. The 2,000 remaining is just a loan. So you would pay that back to where you would any other loan, not including taxable income.
Okay, interesting. I'm gonna have to go back and listen to this replay myself, guys. I hope that you guys are listening in because this really is valuable information. If you guys are watching, please share this with your friends, share this with your business owners, share this with, just individuals, because like Martin said, he does taxes all over, okay, with all kind of individuals. So please share this information. This is some valuable information right here. What with unemployment filings at an all-time high, what are some things that taxpayers can expect when filing this year?
Well, this is a good question, Angel, because a lot of people have never collected unemployment before. One thing, if you've never collected unemployment before, a lot of people are going to be surprised to find out that unemployment is taxable. It's fully taxable income like any other income, just like your wages. There's no money withheld on the unemployment benefits you receive unless you ask them to withhold money on it. So most people have received this money, which is fully taxable, and have had nothing withheld on it. So a number of people are going to be sadly shocked when they look at how much tax they owe. A lot of people are going to owe money because of this. If you end up owing more money than you can pay, still file on time and just request a payment plan from the IRS. They're very easy to get.
Okay. The next question. I think we almost got just 2 more questions left, but I did share this in 2 groups, so we'll see if anyone tunes in from there. But so many typical W-2 employees found themselves purchasing computers for themselves, purchasing computers and for their children, purchasing office equipment. And as a 1099, we're used to being able to write those types of things off on our taxes. Will that be the same for the W-2 employees this year, or what can those employees expect?
Well, unfortunately for W-2 employees, the Tax Cut and Jobs Act completely eliminated miscellaneous itemized deductions until the year 2025, which is normally where those type of job-related expenses, you would deduct them as a miscellaneous itemized deductions. So that's gone, no more. However, the sales tax you paid on it can be added to the taxes that you paid. So if you can itemize, if your total itemized deductions are greater than the 12,500 or the 25,000 for joint, you can add that to the sales tax that you paid on your printer or your computer. You can add that to your taxes that you paid in until you get to the state and local tax limit of $10,000. So you can add that in, but that's the only deduction you're going to get if you're a W-2 employee. If you're a 1099 employee, if you get a 1099, you had to buy a computer, you can still deduct that. You're going to file Schedule C for self-employment income. and you can deduct that as an asset. However, a computer is considered a listed asset. A listed asset is something that can very easily be used for personal use. So with a listed asset, you have to keep evidence as to your percentage of business use. If you have a laptop, you may use it some percentage of time for business, but you probably use it some percentage of time for personal use also. Maybe answering personal emails. Maybe you like to play a game or something. So there's some percentage of time that's personal. So whatever the usage is, you need to do something to keep track of that percentage, either a log or something. And then when you fill out your taxes, you're going to put in what percentage of that computer is used for business. If it's 60%, then you're going to get to deduct 60% of it. If it's 90%, you could get to deduct 90% of it. Now, I got to tell you, sometimes it's 100%, but the IRS doesn't believe 100%. But sometimes it really is 100%. If it's 100%, take 100%. Just make sure that you're getting your business use percentage correct and that you can prove it if you need to.
Okay, and this is for the computer usage, right?
The computer usage, right?
Okay.
1099 employees.
Interesting. Huh. So we have another audience question. What advice can you give? This is coming from Courtney. What advice can you give to people filing as new self-employed / independent contractors for the first time? I imagine it's a little different than having a W-2.
It's quite a bit different. Number one, you have a possibility of a lot more deductions than you would have if you were an employee. If you work from home, you may be able to take an office and home deduction. Now, this one is one of the most litigated items that IRS litigates is office and home. And the reason why the office and home deduction is a very, very minor deduction, but it can lead to a bigger deduction, which I'll get to in just a minute. But the office and home, the reason it's so litigated is because the way the law is worded. You can deduct an office and home. It doesn't have to be an entire room. It can be a part of a room, as long as that space is used exclusively for business. And the word exclusively means exclusive. You can't double as anything else. There's a recent court case of a CPA who had an office in his home, and it qualified. He used it only for business. His only problem was there was a restroom in there. And he told the auditor that he allows his guests to use that restroom. Well, there goes your exclusive use. It's no longer exclusive. So you have to have 100% exclusive use to get the office home deduction. If you can qualify, though, like I said, don't expect your office and home deduction to be huge. It's not going to be huge. It's going to be small. Okay. But what that gets you then, if you have a legitimate office and home, when you leave your home to go on a business trip with your automobile, let's say you go to the bank to deposit a check, which I know nobody does that anymore. We use our phones, right? Mm-hmm. Let's say you're going to the bank to deposit a business check. So that trip to the bank and back is a business trip. Excuse me just a minute. That business trip, then, that can add up to a lot of deduction for you, the auto usage. So that's why the home office is litigated so much, because it leads to the bigger deduction of the automobile. So that's why you want to get that if you can. The other thing you can look at if you're self-employed is a pension plan. You can deduct a pension plan. You have, in some cases, you have until April the 15th to establish the type of pension plan that you want and deduct it for 2020. You can talk to a financial advisor or a tax advisor on that one. Another neat thing is if you have bought your health insurance, if you bought your health insurance yourself, you paid for it yourself, you can deduct your health insurance as a self-employed person, which is very nice.
Health insurance for when for the open enrollment that just passed, or previous?
If you were self-employed in 2020 and you paid for your own health insurance, you can deduct it on your 2020 return. There's a lot of
going to be doing my taxes, guys. Go ahead.
There's a lot of great things you can do as you're self-employed. Now, a lot of them you have to do some planning for, and 2020 is over, so you can't go back and undo a lot of it. But for instance, if you're self-employed, and you hire your child to work for you, let's say your child is under age 18, you pay them, you have to pay them reasonable. You can't pay them in a reasonable amount, but of course, at least minimum wage, whatever that is where you live. You can pay them, it gets it out of your tax bracket, whatever it is, into their zero tax bracket, and you don't have to pay Social Security and Medicare taxes on their wages. You give them a W-2, you have to file payroll tax returns, but they get this at their rate. As their guardian, you take that money and you deposit it in a 529 plan for their college. That's the way you can legitimately deduct their college tuition. Just make sure that they're really working the business, that you're only paying them what they really earn.
Woo! Guys, that right there was a nugget and a half. I don't know if you guys caught it, but that right there was a nugget and a half. So if you have children, was that 18 and over, right?
You can pay them even after that, but you're not their guardian then. Once they're 18, they get to do what they want to with their money. But if they're still your dependent under 18, you pay them. There's no Social Security, no Medicare tax. It's coming out of your bracket into their zero bracket. That's a good one.
Wow. I did not know that. I love this. Okay. So this is the last question that I have, guys. And if you guys have any other questions, please drop them in the chat. For new business owners, home-based business owners, okay, I think that I asked this. For new business owners and home-based business owners, what are some things we should be aware of regarding paying our taxes? I know that there was one nugget that you had given me, and if you guys if you could share that with the audience.
Yeah. Well, if you're brand new to being self-employed, one thing you may notice right off the bat, there's no taxes being taken out of what you make. So you have to estimate what you're going to earn and prepay your taxes. IRS requires you to prepay. So you need to prepay based on what you think you're going to earn. And 4 times a year, they're called quarterly payments, but only the IRS can take the year, divide it by 4, and come up with these dates. These are the dates when your payments are due. Your very first payment for 2021 is going to be due April 15th. So April 15th, you're going to pay any prior taxes that you owe for 2020. You're also going to make your first payment for 2021. The next payment is due June 15th. Payment after that, September 15th, and your final payment is January 15th for 2021 taxes. Do the best you can, estimate it, and prepay those taxes. You prepay that with Form 1040 ES.
Okay. Now, what if what if you said that you have to guesstimate how much you're going to make? So right. It's like a future type deal. What if you're a little bit over or a little bit under? How does that work?
Well, if you're self-employed, if you come in a little bit over, then you're probably going to apply that for the next year, reduce your next year payments. If you come in under, then you're going to make up the difference on April the 15th. Okay.
All right. I think that we answered this one already, Ashley, but I'm going to answer it anyways. I'm going to ask it anyway. So Ashley Sullivan is asking, can only self-employed use their health insurance as a tax deduction, or can W-2 employees do it too if they pay for individual coverage?
W-2 employees can, however, it's a lot more difficult to get the deduction. It only is a medical expense on Schedule A, and it needs to exceed, your total medical expenses need to exceed 10% of your adjusted gross income before you get your first dollar of deduction. So the answer is yes, maybe.
Okay, thank you so much, Ashley, for your question. I hope that that answers it properly. So guys, I'm going to check real quick because I did share this to other groups, and I'm trying to see how do I do this here? If they have any other questions in those 2 groups that I'm an admin of. Okay, so none here, and then the other group is 850. 850 credit strong. Let's see if there's any questions there. 850 credit strong. Okay, looks like there's no questions there. So I'm gonna go back to my page. All right. So I think that's all the questions that we have. If no one has any other questions, we're gonna go ahead and wrap this up. But I want to let you all know And Martin, do you have anything else that you want to add first?
Just keep good records. Whether you're an employee, where you get a W-2 or self-employed, the biggest thing I see where people don't keep good records, and you end up cheating yourself, not the government, by not keeping good records. So keep track of things. Like for instance, we were just talking about medical expenses. The vast majority of us are never going to get a medical expense deduction because we're never going to spend that much out of pocket in a single year. But you never know. So what you do is, to me, what I recommend you do is start an envelope each year called medical expenses and throw all of your receipts in that one envelope. Now, if you get to the end of the year, you can guess, okay, I may have spent $2,000 in total medical this year. That's less than 10% of my income. I don't need those receipts. I'm just going to throw them out. But if you get near the end of the year and something big happened, then you know, okay, this is pretty close to 10% of my income. I need to add these up and see where I'm at.
Yeah.
And then if you do that, then you might say, okay, I'm over 20%. So if you're over 20%, you know that, and it's say December 1st, well, then add in some other deductions. There's always some other things that you can do. Like, for instance, you get a new pair of glasses, which would be deductible. You could maybe go, if you have a dental exam due in January, maybe move that up to December, so it would be deductible. So, but the trick is to keep track of these things so that you know, and that way you don't cheat yourself.
Okay, awesome. So guys, make sure that you keep your records. Get the envelope, pull out the old envelope or the plastic bag, put the receipts in them.
There's probably apps for that now.
Yes. There's an app for everything, right? So listen, guys, I really appreciate all of y'all for tuning in. Martin, I'm so grateful for you. Thank you so much for taking the time to speak with us.
Thank you, Angel. I appreciate it. I had fun doing this.
Yes, and we're gonna listen, we might end up doing it again. Listen, Mr. Martin Wathen, again, he's located right here in Florida in Lutz, but he's able to help you regardless of where you are at in the nation and all over the world, like he mentioned earlier. So he can represent all taxpayers, that's individuals, corporations, trusts, partnerships, and estates before all levels of the IRS. So with audit, appeals, and collections. And again, he's one of integrity. So I'm sorry, guys, if you're into organized crime and you want him to help you with your taxes, he's not going to help you with your taxes, okay? We're not trying to get my man locked up and arrested, okay? We need him to help other people. So, but again, if you have any additional questions, please feel free to reach out to me. My phone number is 256-743-3628. You can email me at info@angelwhiteenterprises with an S.com, or you can contact Martin directly. Just make sure that you let him know that that you listen into this webcast. His phone number is 813-991-6500, or you can email him at Martin, MARTIN, at Wathen Tax Service. That's WATHENTAXSERVICE.com. Thank you guys again for tuning in. It's been a pleasure. God bless you all, and we look forward to some happy filings. I don't really know how to say that, but you guys have a great day. Go ahead, Martin.
Many happy returns.
Many happy returns. We love it. Yes, Courtney, that number 813-991-6500. Yes. And then it's email MARTIN at Wathen, WATHEN, tax service without the S.com. So thank you guys so much. Have a wonderful afternoon. And I'm going to end this live recording. Let me see how we stop the recording. Oh, wait a minute. How we take this? Oh, stop live stream. I'm stopping the live stream now, guys. As you can tell, it's my first time. Have a great one, guys. God bless.